Hi there, welcome to Kneppy Invest. Time for another technical update focusing on Lindsay Australia and 8 other companies on the ASX. And those other 8 companies I'll be looking at in today's video include AMA Group, EML Payments, the Star Entertainment Group, and Decmil. Now, the main similarity between these 4 companies is not the sector or anything like that. Each of these companies released a bit of news during the week that did affect their share price. In some instances, significantly affect the share price. One of these companies saw their share price drop over 30% in one single day. Dropsuite is a company I did a standalone video not long ago, a few days ago, and the catalyst for me doing a standalone video for Dropsuite was just their Appendix 4C. But the share price is potentially breaking out of a long-term trading range. And I want to emphasize that word potentially. I really want some confirmation. And more than likely, we'll get the confirmation, hopefully, in the next week. Has the share price broken out for Dropsuite? Now we'll have a look at Wide Open Agriculture, a company I have never looked at in the past, and I'm just making an educated guess that they are in the agricultural sector because agriculture is in their name. And the last 2 companies I'll be looking at in today's video are 2 companies I have featured in previous technical updates. In fact, Prospech I looked at last week, and Western Mines Group was a few weeks ago. But interesting enough, both of these mining exploring companies have seen their share price go in opposite directions after a significant rally of the share price on positive news. So I am exploring why sometimes a company share price can keep on rising after a positive announcement, while for some other companies, the share price falls after a positive announcement. So we'll have a look at how the market and how the share price have performed over the past few weeks for both of these companies. But first of all, let's look or talk about Lindsay Australia. I have featured this company in a few of my technical update videos before, and even though I've done that, I have not taken a position in this company, which is okay. I don't regret that at all, because I have holdings in quite a few other companies whose share price are in uptrends, just like Lindsay Australia. But congratulations if you did take a position in this company simply because the share price moved into a nice looking uptrend. So the share price of Lindsay Australia moved into an uptrend around about July or August last year. So the market was starting to anticipate some good news from the company. The market was thinking that this company was in some pretty good tailwinds, and the market was absolutely right, because the share price has rallied from about 45 cents all the way now to a share price of $1.34, and that's in less than 1 year. So the share price has more than doubled. In fact, it's more than tripled over, we'll say, about a 10-month period. That's the sort of returns you want when you're holding a company in your portfolio. Not only that, I always look at volume. And during the past 10 months, we have seen volume expanding, getting bigger. That's actually a really good sign that there are fund managers becoming interested in this company and taking positions. Now, the share price has rallied a lot since the middle of March. So in the middle of March, the share price was around 81 cents. So the share price has increased by more than 50% in just over 1 month. And then on the 17th of April, 2023, the company released another market update. This was a positive market update. In fact, they were talking about one of the competitors that has gone bankrupt, a refrigeration transportation company that has really benefited this company. And that's why the share price increased 16% on the 17th of April. And not only did the share price increase on the 17th of April, the share price has kept on increasing since then. So right now, the share price and the chart looks fairly bullish, but because the share price has increased a fair bit in only 1 month, I wouldn't be surprised to see the share price pull back because of profit taking. So I wouldn't probably rush in right now, buy some shares in this company. I might wait for a pullback in the share price. So that's what you could do if you are keen to take a position in this company. Now onto EML Payments, and we're going to be looking at 2 charts here. I've zoomed in on the daily chart going back from June last year to current times, because I just wanted to show you the share price of this company was in a well-defined downtrend, beautiful downtrend until we got to end of October last year. The company released some really negative news. Share price fell to about 40 cents, but that share price low has held firm over the last 6 months. The share price tested that low back in October, about a month ago, towards the end of March, but it held firm. So definitely around 40 cents is a strong support level for EML Payments. And then after the share price tested that support level, it has gone on a pretty significant run. In fact, the share price has almost doubled in that month period. Not only that, the company released on the 17th of April, 2023, the same day Lindsay Australia released their trading update, an announcement titled New Leadership, New Operational Priorities and Strategic Review. And the market absolutely loved this announcement, possibly because the old CEO has been thrown out and we got new management. And sometimes that can be good news. And at this point in time, the market thinks this is good news. Share price has gone on a beautiful rally. And most importantly, the share price has gone above the 150-day moving average. And why is that important? Well, let's have a look at the zoomed out chart, daily chart for EML Payments. And this is the daily chart for EML Payments going all the way back to May of 2021. The reason I want to go that far back is because in May 2021 was the date they released that really negative news in regards to what was happening with one of their Irish subsidiaries, and the share price has been a downtrend since then. And one of the resistance levels for this company has been the 150-day moving average. We saw the share price try to get above it back in November 2021, but failed. And every single time the share price gets to or moves towards the 150-day moving average, we see the share price fall back. And that's why the share price getting above the 150-day moving average and remaining above that moving average over the last 3 or 4 trader days is potentially a bullish sign. Now, I wouldn't call EML Payment share price now in an uptrend. I want some more confirmation. What I want to see is the share price dip a little bit lower and the share price rebound so we get a new higher high, beating 81.5 cents, which was a high a few days ago. So it's looking better now for EML Payments and their chart. So I think the bottom possibly has been reached, and that bottom is 40 cents. But we still have to be aware there could be more bad news on the horizon. And if the company releases more bad news, I think it's unlikely at this point in time, the share price might fall below that 40-cent support level. The first 2 companies I featured in today's video released some positive news to the market. Now we get to the bad side. A company that released some negative news, AMA Group. This is a smash repair company with absolutely minuscule margins. And in fact, I have on occasion, a couple of times, thought about taking a position in this company, just a trading position, so short to medium term, because this is definitely not a quality company. And the main reason I've just held back is because of their business model, those minuscule margins. But when the share price gets to about 14 or 15, 16 cents, which it has on occasion over the past year, I've just been thinking this does look kind of attractive. Maybe the market is overreacting to the downside. So this is the daily chart for AMA Group going back to February of last year. And we saw the share price in June of last year get to about 16 cents and then just go sideways. And that 16 cents level is really important. And you'll be able to see that when we zoom out in the next slide. I think we're either looking at the weekly or monthly chart. And the share price tried to go on a rally. Share price went as high as 28 cents back in November. So maybe I was thinking at that point in time, the low for AMA Group has been, reached. 16 cents is the low, and potentially, the share price was trying to move into an uptrend, but then it really struggled for a period of time in December, January, just going sideways. And then on the 17th of April, just like Lindsay Australia Group and EML Payments, this company released an announcement. But unlike those other 2 companies, this was a negative announcement. In fact, this was their Appendix 4C, the third quarter quarterly cash flow and activities report. And you could just see by the market reaction that this was not taken well by investors. Share price down 35%. And in the next 4 trading days, the share price has remained sort of gone sideways. That's actually a bad sign because there has been no buying coming in, forcing share price to go back up. So there has been no bounce. So pretty big volume as well. Talking about volume, if we go back to June, when the share price first reached 16 cents, you can see really strong volume coming in then. And that's actually a good sign when the share price has fallen significant amount like AMA Group. That is telling us there is some big, some fund managers getting interested in this company at 16 cents. But the share price, when it dropped 35%, fell to about 16 cents or just above 16 cents. So this support level for AMA Group has held firm. But the question is, can it remain holding firm in the future? Now, 16 cents for AMA Group is a really strong support level. And I'll show you why right now when we look at the longer term chart for the company. And this is the weekly chart for the company going all the way back to 2012. And there's one reason I wanted to go all that way back is because back during the COVID-19 financial panic, the share price of AMA Group fell to 16 cents. And then we saw a pretty good rebound in the share price. In fact, the share price went from 16 cents back up to around 80 cents. That's the sort of returns you want in a fairly short period of time. The share price has pulled all the way back to 16 cents. So you can see why 16 cents is a really important level for this company. So there will be traders who know exactly that. And that's why when the share price falls to 16 cents, you might see some buying. But in the past few days, we haven't seen much buying. Even though the share price has remained above 16 cents, I am concerned the share price might fall below 16 cents. And if the share price does fall below 16 cents, that means the share price of this company will be at least a 10-year low, because the last time the share price of this company was lower than 16 cents was way back in 2012. Now, let's talk about the Star Entertainment Group. I did look at this company in one of my technical updates a few months ago, and that would have been sort of in the middle of February because the share price fell a fair bit in 2 trading days. A nice little rebound in the share price, which is what you would expect. So I was talking about AMA Group. We haven't seen that rebound just yet, but with the Star Group, we did see that rebound just after those 2 big down days, and the share price went from $1.19 back up to above $1.50 in about 6 trading days. The share price has drifted lower since then, so that's a very definition of a dead cat bounce. And then on the 19th of April, the company released a trading update, and just by their market reaction, share price only down 7%. So a lot of this negative news has already been priced in, but this was not a good trading update. And there's a lot of commentary you can go through to just know that this is a bad trading update. For instance, the group's current earnings performance is at unprecedented low levels, excluding the COVID-19 period. They even mentioned that the casino in Gold Coast has really underperformed as well. And they are blaming the economic environment or the macroeconomic environment for that as well. And that's why the share price is down at historic lows for this company. When I mean historic lows, let's look at the longer term chart for this company. So previously, I have looked at the daily chart, longer term daily chart for EML Payments, the weekly chart for AMA Group. So why not look at the monthly chart for the Star Entertainment Group since they listed on the ASX way back in 2011. And when I said historical levels for this company, we're talking about all-time lows. So the last 2 times we did see the share price under pressure, back in 2013 when the share price fell to $2. Back during the COVID-19 financial panic, the share price fell to about $1.40. Right now, we are lower than those 2 lows. And the other thing is massive volume over the last 3 weeks. That's never a good sign. That means fund managers are more than likely getting out of this company. So this could be the bottom, potentially, or the bad times could continue for the Star Entertainment Group. So I'm not that keen in taking a position, even though the share price is at an all-time low for this company. Another company that released a trading update on the 19th of April, and we are in that season now. We're going to see more and more trading updates being released during the rest of April into May. Some people might call it confession season. And the one sort of sector I'm really looking forward to seeing any trading updates is in retail. Are Australians still spending, or are Australians pulling back on their spending? And if we see a flurry of really negative trading updates from retail companies, that will be a negative sign. I do own a few. I think potentially the market is overreacting because some of those retail companies are on fairly low multiples right now, which is understandable because the market is pessimistic. But anyway, Decmil did release a market update on the 19th of April, and we saw the share price rally 18% on the 19th and then another 20% on the 20th. This is not the sort of company I like holding no matter when. Just like AMA Group, this company exists on minuscule margins. They have something like ridiculous amount of revenue, $500 million of revenue, something ridiculous like that, yet almost unprofitable. And this company has experienced some really tough times about 3 or 4 years ago. Share price absolutely fell off a cliff, and the share price is trying to recover right now. So I won't call this a breakout simply because the share price has been higher back in February and also back in August last year. So we're not at a 6-month high for Decmil Group. And I do look for companies who release a positive announcement like Decmil Group. And the main thing I'm looking for is that positive announcement coinciding with the share price moving to at least a 6-month high. So I'm not surprised to see a little bit of selling coming in on April the 21st, share price down 10.6%. So those who bought in back in August and February have had the opportunity to sell out now because the share price had fallen from when they bought in. And I probably should have mentioned pretty low volume for Decmil. And I really like to see volume when a company releases a positive announcement because that is telling me there are fund managers interested in the company. And over time, you want more and more fund managers becoming interested in a company that you do own because ultimately they're the ones who will drive up the share price. And the main reason you get more and more fund managers interested in the company is financial expansion from that company. And I don't think Decmil Group will ever financially expand to the point I want because of the minuscule margins. And I do believe the company is fairly cyclical as well. Now onto a company I've done no research on in the past, have no idea what they do, and that is Wide Open Agriculture. And this company released a couple of interesting announcements. The first one was on the 19th of April when the company released a letter from their CEO providing a business update. And the market absolutely loved this business update. So if you look at this particular daily chart, you can see share price in a well-defined downtrend. And just like EML Payments, 150-day moving average was a pretty good, solid resistance level for this company. And on this date, the share price rallied 55%, and the share price went well above the 150-day moving average. And there was also massive volume. So there were parties on the ASX really interested in Wide Open Agriculture. Maybe it was day traders, short-term traders, I don't know. Ultimately, I would want, again, fund managers becoming interested in this company. There was a little bit of selling during the day, and I know they're selling just because when you look at the one-day candlestick, there is a tail to the top of that candlestick. Share price reached a high of about 39 cents and closed at 32.5 cents. And the main reason there was selling is because the share price had collapsed a fair bit from about August last year. So August last year, the share price was around 62 cents and it fell all the way down to 15 cents. That's a pretty significant drop in the share price over a short period of time. So there would have been quite a few shareholders of Wide Open Agriculture who bought into higher prices. They saw this announcement, they saw the share price rallied, and they saw that opportunity to sell out of this dog stock. So even though I don't know what this company does, I know a lot of investors would call this company a dog stock just because the share price fell from when they bought in. That is the mindset of a lot of investors out there. I've seen this with my own, heard this with my own ears from colleagues at work. Anyway, the next day, the company went into trading halt. And the reason they went into trading halt was actually quite interesting. The trading halt is requested pending the release of a clarification to yesterday's announcement, and they haven't traded since. So it's going to be really interesting to see what this clarification exactly is. Now on to Dropsuite. I did a standalone video for this company. You can see this is a daily chart going back to February 2021. So over the past 2 years, Dropsuite has been in a trading range. Whenever the share price gets to around about 25, 26 cents, or even just above that, that's the time to sell. And whenever the share price gets to around 16 to 17 cents, that's the time to buy. And it's done that quite a few times over the past 2 years. In fact, I took a position in this company because the share price fell to about 16.5 cents. So I just looked at this trading range, the Dropsuite's in, and I went, well, now's the opportunity to take a position in this company. And after the company released their Appendix 4C, the share price of Dropsuite has gone into a nice rally on increasing volume as well. So it's a pretty good volume coming in for this company. And on the Friday, April the 21st, the share price went above the top of the trading range. Now, if we go back to July and October 2021, we saw 2 instances when the share price tried to get it above the top of the trading range and then failed. It only stayed above 26 cents or 25.5 cents for a very brief period of time, and then the share price pulled back. So we have seen the share price move above the top of the range. The question moving forward over the next few trading days is whether the share price can stay above the top of the range. If it does, if the share price goes sideways, for instance, or if the share price continues to move up, that could be a sign the share price of Dropsuite has broken out of this trading range and has moved into an uptrend. So all eyes, well, maybe not all eyes, but a lot of eyes will be on what Dropsuite share price does in the next few trading days. If we do see some selling and the share price moves below 25 cents, that would be sort of confirmation that we have reached the top of the range. And don't be surprised if the share price falls back to 16.5, 17 cents in the next few months. The next 2 companies we're going to look at are 2 companies I have featured in previous technical updates, Western Mines Group in this slide, and then Prospech Limited in the next slide. And I just want to compare and contrast the market reaction after both these companies release really positive announcements where the share price has increased by more than 100% in one day on fairly large volume. We have seen different reactions for each company. The positive reaction is Western Mines Group. Now, this is a daily chart for the company going back to January of 2022. We saw a nice little rally in the share price back in March and April of last year. In fact, the share price reached a high of 35 cents. So straight away, we know 35 cents is a resistance level for Western Mines Group. So there would have been quite a few shareholders who bought Western Mines Group at between 30 and 35 cents in April, May last year, who just want to get out. And because the share price has fallen a fair bit, they've had to be patient. And the day before this company released this really positive announcement, the share price was around about 12 cents. And the share price just zoomed up higher on this day on a massive volume. In fact, the high on that day was about 47 cents, and the share price closed at about 32 cents. So there was a little bit of selling during the day, and more likely that selling, a lot of that selling was from those shareholders who bought in April, May of last year. So the most important thing is, on that particular day, share price closed below that resistance level. But then the next day, the share price went above and beyond that 35 cents resistance level. And in fact, the share price has remained above that level ever since. And that is actually a bullish sign. That means the share price right now is at least a 6-month to 1-year high. And that is one of the things I'm looking for when a company does release a positive announcement and you see the share price rally by about 100%. You want to see the share price at a long-term high. And when I say long-term high, I'm talking about at least 6 months, if not 1 year. And then on the last 2 trading days of the week, on the 20th and 21st of April, the share price of Western Mines Group went on a nice little rally, increasing from about 38 cents to 58 cents and actually reached a high of 67 cents. And not only that, we saw volume coming back in, and this could be just the day traders, but the day traders are liking what they see with Western Mines Group. Now let's have a look at Prospech Limited, a completely different story than Western Mines Group. So unlike Western Mines Groups, whose share price kept on rallying after positive announcement, Prospech Limited's share price has kept on falling after positive announcement. In fact, the share price is almost back, well, not quite, almost back to the level it was before the announcement. So before the announcement, the share price was around 2.1 cents. Now the share price is 2.9 cents. So all those gains from the positive announcement have almost been wiped away. Now, this is the daily chart for the company going back to about March of 2021. For some reason, there was not a lot of trading in this company in 2022. So April and May of 2022 is sort of, you can see my mouse, sort of that area. So even though the share price on the day they did release this positive announcement went above, just above the levels we saw back in April, so the share price did get to a 1-year high. A lot of selling came in. And one of the reasons might be because there's not a lot of trading in this company. Those who are holding this illiquid company just wanted to sell out, and they've been selling out en masse. The other thing is the massive volume on the day they released an announcement, and there hasn't been much volume since then. If you compare that to Western Mines Group, you have seen continued pretty high volume. So the market, those day traders have remained interested in Western Mines Group, but they've become disinterested in Prospech Limited. So I do think you need day traders to remain interested in a company for the share price to keep on rallying. And it doesn't hurt if the share price is at least a 1-year high. That's all I have for this technical update, 23rd of April 2023 edition, looking at Lindsay Australia and 8 other companies on the ASX. If you have any questions, any thought about any company I featured in today's video, I'd love to hear from you. So leave your thoughts in the comment section of this video. Otherwise, that's it for today's video. Have a good day. Talk to you later. Bye. And just don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.